Hello and welcome to VCCTV. This is Joseph Rai. We have with us today Nitish Agrawal, who is the Managing Director at investment banking firm Indium Capital. A warm welcome to you and thank you for joining us. Let's start by talking about some data. According to our internal data, the number of private deals this year have fallen slightly to 53 compared to 72 last year. However, deal value rose slightly. So you closely track the deals that are happening. Does these numbers reflect what is exactly happening on the ground?
Yes and no, Joseph. So, is there a decrease in deal numbers? Of course, your data is correct. There is a decrease, but let's not equate that to reduction in interest in Indian healthcare investments. The number of deals and sizes will continue to vary a lot, but I think there is complete confidence that we have, and I think the industry should have, that investments in healthcare in India will continue. Their modes will change. You've seen a lot of investments, primarily the largest chunks have gone into hospitals, followed by diagnostics and life. You'll see those modes change, and most of the investments come from private equity, overseas money. You might see changes in those modes. So it might be more domestic money, it may not be private equity investment, it might be longer term investment, etc. It might be in different formats, but we feel it's just the tip of the iceberg, and you'll see more and more investments.
So multi-speciality was at the center of attraction among PE. So does this mean that consolidation in the hospital space is still a long way?
What has started off well is just the first phase, which is consolidation in the large tertiary hospitals, which is what we see right now. The top 10, 15 chains keep buying out other smaller players because it's easier for them to buy versus build and get scale. There is merit to scale. The consolidation in other areas hasn't even begun. You look at devices; it's a nascent industry. You look at tier 2 hospitals, primary healthcare, imaging chains, and everything else largely except from tertiary hospitals and diagnostics. Consolidation there is yet to begin. I think that's going to be much bigger in size and scope, with different players and different modes, like I said earlier.
And also, single speciality has seen a lot of PVC activity in the past years. And according to our research, we found out that eye care, oncology, and IVF have grown in a healthy way among all the other subsegments. What are your views? Do you think that these are the three segments that are giving a lot of returns to the investment, that would give returns to the investments?
Very interesting. The way we look at it is that single specialty is very much needed in India. When there is dearth of opportunity to set up large hospitals, you've got to take smaller, bite sizes in terms of investments and locations and sizes of real estate. So it's here to stay. IVF, onco, etc., and I are making money right now. I think the rest of them also will. People just have to get the models right. Nothing to say that mother and child, for example, will not make money, or the gastro chain will not make money. People are talking about standalone cardio hospitals as well. The point is that there is literally unlimited demand in India, as long as you can supply the right service, with the right price points, the right location, etc. So what we're seeing is a wave of experimentation. Single specialty in India is less than a decade old. So I think it will just evolve more and more and spread out wider.
We've also seen a lot of healthcare IPOs. Will we see more IPOs coming up, and IPOs being a method for exit for private equity firms?
At current prices, it's a surprise that everybody is not going for it. Yes, it's a sign of an industry which is growing fast and is reaching some sort of, I would say, maturity, but some sort of recognition amongst the larger financial community that's an industry which is mainstream. There were only two listed players for many years. Almost a decade there was just Fortis and Apollo to talk about. Now we've got in the space of 2 years. I think that increase in base of listed healthcare companies is a great sign. Not just from an exit from private equity, which is very important, because as you see exits, you will see more investments, but also participation from the general public. I mean, remember the general public who participates in the IPOs and invests, the millions of people are also the consumers of that service. So when they buy an Infosys share, or when they buy, Hindustan Unilever shares, they know that they're buying shares of a company that they're consuming the product of. If they could do the same for healthcare, why not? I mean, it will be a great thing for industry.
And what are your thoughts on this new age health tech companies when would we see an inflection point where private equity firms will also start crowding and then, loosening the purses for these firms?
For me personally, health tech has been a bit of a disappointment.
Okay.
Have investments happened? Yes.
Yeah.
But it's probably of the entire technology segment. After a decent start where Practo got a fair bit of funding, sum total of all the other funding in health tech has been much smaller than other segments. You take fintech, you take consumer tech, you take any kind of thing, it's been much, much smaller. And there's been no breakout there yet. So it's been a bit of a disappointment. I believe technology has a huge part to play in it. We should be doing things that can again leapfrog like we did in telecom. But unfortunately, it's not yet played out. So let's see. I don't know the answer. But let's see who can scale some of the fundamental barriers in healthcare in terms of interacting with hospitals, doctors, and the like, and make it useful.
Okay. I also heard you saying that healthcare valuations are abnormal. How true is that?
It's true. It's a fact.
Okay.
By abnormal, I don't mean that by abnormal it's in comparison to the rest of the world. Not that there's anything intrinsically wrong with it, or that it's a bubble. I didn't mean any negative connotation, but it is abnormal. If you look at industry which has 15 to 18% return on capital like healthcare does, in the best of circumstances, nowhere in the world will you be able to justify a 15 times, 20 times, or even higher EBITDA multiple. There's just no way. A capital-intensive industry like this will do it. Keep in mind that this abnormal multiple is happening because it's the multiple for a small number of consolidators, the top 10, 12, 15 chains. And the multiples, they are paying downstream for acquisitions. So, and we've seen that play out in diagnostics as well. The common thing here is that it's a supply constrained environment. And so investors are flocking to put money where lack of options in other places. And that is what is driving some of the interest from the investors. Secondly, these consolidated chains fundamentally do well. Apollo, for example, does not have even half the problems of attracting doctors as a standalone hospital would have. Doctors want to work with Apollo. That's the power of the chain. So those two factors make the demand and the supply side economics good. And healthcare chains like those are growing at 20%, 25% per annum. So it makes for a great investment opportunity. So it's abnormal, not in a negative sense. And since it's a long cycle business, it probably will continue for some time later.
All right. It was a pleasure talking to you. Thank you for those insights.
Likewise. Thanks, Joseph.
Thank you.